What's up everybody, welcome back to Cilinix Crypto and welcome to a new trading education video. I also released one last week on how to identify crashes and how to expect when a crash or a flush, which happens more often in these market circumstances, how you can see that coming. So check that out, and just in general, my playlist Trading Education, I would strongly recommend that. I mean, obviously I made the videos, but there's just a lot of free value in there. All right, you can watch them for free. I personally think that there is a lot of value in the videos, but that's up to you. Maybe there is no value for you. Who knows? But in this video, we'll do a more basic video, a really beginner friendly video, I hope. All right, and if it's not, if I missed anything, please let me know down in the comments, and I'll try to get to those as soon as possible. All right, I'll try to check it every once in a while if there's new comments. But what we will do in this video is we will go over the technicals on how to open your first trade. All right, very simple. I don't think it will take too much time. I will actually show you how to open a trade. I might even open a trade together with you, so we can really focus on that, and really I'll show you the entire process. And that's what we'll do, all right? I'll be showing you on Bybit. I'll be showing you it on my sub account, so you will see some money, and we will open a trade with real money. I think that's the best way to do it, to actually show it to you. And we'll also go over some primitive risk management, which is one of the most important things in trading. I'll show you my main trick, which basically, I mean, well, we'll talk about some things along the way, all right? It will make more sense. But we'll talk about that as well. Like I said, I'll be showing it to you on Bybit. It's practically the same for most exchanges. Personally, I use Bybit for everything. I'm also affiliated with them, but that's a story because I just liked their exchange, and that's why I became affiliated with them. There's a link down in the description if you want to sign up there, but that's up to you, all right? You don't have to use that link if you don't want to. But all right, so let's get right into it. So the first thing you need is money on your account. And you can just skip ahead if you know how to do this. But basically what you have to do is you go to your, and like I said, I have some money on this account, but it's more kind of like a testing account for different strategies. So what you do is you want to have money in your spot wallet, all right? So there's different ways to do that. You can just deposit crypto from a different exchange, for example. You can also buy crypto via Bybit, and they have a lot of options for that. Like here in the Netherlands, you have Ideal, you have a SEPA transfer in Europe. A lot of ways to do that. But then you'll have money in your spot wallet. And what you need to open your first trade, and then we're talking about perpetual futures, all right? So then you're basically, you're buying the crypto, but technically you're buying a contract to trade the crypto. So you need the money in your derivatives wallet, all right? So it's first in your spot or funding. You go to that wallet, you click transfer. It needs to be in USDT. So if it's something else, first go to trade, spot trading, and or type in USDT right here. Look for the ticker. For example, if you have euros on your account, look for USDT/EUR, and then you can buy USDT there. So once you have USDT in your spot, you transfer it to your derivatives wallet because you need USDT to open trades. Quite logical, of course. You need money to open trades, and the most known currency or the most known stablecoin in crypto is USDT. Then you go to derivatives, all right? Derivatives up here, and then USDT perpetual. That's where we go. And here you can see I have a couple of trades open. Nothing special. Like I said, this is mainly testing. Luckily, they are in profit. But here, this is quite overwhelming, all right? It might be, at least. Because you have a huge chart, which is interesting. But personally, I never use this chart. The two most important things are here to the left. Here to the left, you can select the crypto you want to trade. I'll open some sort of a test trade for Bitcoin. So then we're fine because we're looking at Bitcoin already. And this to the right is your magic dashboard. That is what you need to open a trade. Now, the first thing you see, there's a lot of things you can see. The first thing that stands out is you have buy/long or sell/short, all right? Because if you're trading, you can either go long, which means that you're basically betting on the price going up, or you can go short, which means you're betting on the price going down. If you're long, you make money if the price goes up. If you're short, you make money if the price goes down. Now, I can go into the technicals of that, but I don't think that's necessary. And then apart from that, there's a lot here. I will go over everything you need to know because most of this you don't need to know. Post only, reduce only, good till cancelled, doesn't matter. The first things that do matter, even though I will give you a trick later on in this video, which also makes them obsolete, is cross and this 10x, or in general, this is leverage, all right? So cross, this both has to do with margin, because if you're using perpetual futures to trade, what you usually do is you use leverage. So that means that if you, for example, right now it's at 10x, I'll zoom in a bit. If it's at 10x and you trade with $50, you have $50, you can put into a trade. You can trade with 500, all right? And you borrow the rest and you pay something for that, but that allows you to trade with more. And that's also one of the most interesting, but also risky things on crypto. So in general, the higher the leverage, the more risky. So I would say, definitely if you're a beginner, stick to 5x to 10x. And also you have cross and isolated margin. I don't think it's necessary to go into this because of a trick I will show you later. Just stick to cross, all right? So then we go on to opening an order. Now there are two main order types. A limit order, which basically means that you put a limit price, and at that price your order or your trade becomes live, or a market order, which means your trade instantly at the price the crypto is at right now goes live. So let's stick to a limit order because that's a little bit more interesting. So obviously, and this I have other videos for in my trading education playlist. But first of all, you need some sort of a level where you want to take the trade from. All right. So for example, you could do some sort of an analysis that you want to buy Bitcoin at 60,000 with a stop loss at 56,000. Now this is all strategy. All right. That is something you still have to learn. This is more about the technicals of opening a trade. But let's say you want to open one at 60,000. Well, what you do then is you, as your order price, you type in 60,000. That's your limit. At that price, the trade becomes active, all right? And at this moment, it can only be long, all right? Because 60,000 is below the price, all right? So you cannot short at that level if the price gets there. You can do that with a stop order, but we will not get into that. So you do that, and then you just fill in something at the value. This can be anything, and this is a trick, all right? Because this is also the reason why leverage and isolated or cross margin doesn't really matter. For risk management, I think you should always risk 1 to 5% of your capital. The capital in this account is $3,400, so that means 1% is about $34. So you want to risk $34, so that if the trade goes bad, you lose $34. So what you do then is you have to fit in something with value, because then you can head over to take profit / stop loss down here, which is very important, because there you can fit in your stop loss price, which is basically, if you're long, the price where your trade gets sold off, and your take profit. And that is the price where if you're in that trade, if it hits 60,000 first, you will take the profits. So let's say the take profit price is 64,000. And then the stop loss price is 57,000. At that level, if it hits that level, the trade is over. You have lost. The idea did not work. All right. And what you will do then is you can see under stop loss price, your expected loss will be so much dollars. You will see it's $5.5 right now. You want to make sure that that number is 1% of your capital. All right. So in this case, I think it's like if we do 750 with USDT, so then you adjust the USDT, you go back to TPSL, you can see our expected loss is $37.5. That's about 1%, all right? So now you're just risking 1%. It doesn't matter whether the leverage is 20x or 10x or 5x. It doesn't matter whether it's cross or isolated. If you do this way and you can just see what your expected loss will be after the stop loss, your risk is managed, all right? What you then do is confirm. You press buy long because this is a long order. You want to buy if the price hits 60,000, and then it's active. All right. But now, like I said, you have to wait for the price to hit 60,000. That's where the order is. If the price hits that level, the trade is live. And then if it hits 57,000, our stop loss, you have a loss of 1%. And if it hits the take profit at 64,000, you can still see that under current orders right here. you'll have a win of about $48. And that is how you set your first trade. And for short, it's absolutely the same, but then the other way around. Then the limit is obviously above the price. So let's say 65,000. And then your stop loss, you have to press short right here. Your stop loss is above the price because, I mean, if it goes up further, you're betting on the price dropping down. So if it goes up, you lose. So your stop loss, for example, is 70,000 and your take profit is 60,000. And then you can see our expected loss right now is $57. That's too much. So we have to adjust this. You have to kind of tweak around, right? But right now here you can see if the order value is 450, the expected loss is $34. That's 1%. So now the trade is good. You press sell short and then it's live, or at least the limit order is live. The trade not yet, only if it hits the limit. And you can also do market, like I said, then you just need to fill in the value because the limit price is the market price. You do a stop loss, let's say 60,000 from here. Your expected loss is $16. So if we do 920 right here, it will be $33. You press confirm, you press buy long if you want a long, and then the trade is live. All right, here you can see that the trade, as we see it right here, is just fully live. And I should probably close this because this is not a trade I want to take necessarily, but that's how a market order works. All right, now that's it for now. If you do have any questions, let me know. This was a quick basic intro on how to open your first trade. Like I said, I will scan the comments, so let me know if you have any questions. For now though, thank you for watching. Take care and bye.